Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for May 20th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 430. So today I've arranged for Michael Filighera to join us again, and the option professor is back from his trip to Italy for a few weeks. So happy to have him back, and he's here to moderate again. So I'm going to go ahead and turn it over to him.
Okay, excellent, David, and welcome everybody here today. We've got the market pressing up on new highs, and we've got NVIDIA coming up Wednesday with earnings. So there's going to be a lot of action by the end of the week, no doubt. With us today here is Michael Filighera. He's going to give us a little background on himself and what he's doing at his company, and then we're going to get right into the markets because there's a lot going on.
Hi, Jim. Welcome home.
Yep.
And yes, my name is Michael Filighera, and I am the head chief cook and bottle washer over at TradersHelpingTraders.com and LogicalSignals.com. Excuse me. I have been trading professionally since 1979 and have traded in several different exchanges around the globe. And right now I am focused on my small company, which is where I provide coaching and I have a trade room, but I also do updates on YouTube. So, and it's my analysis and then also just the trade room. So I do have some trading.
Great. And at the end of the broadcast, you'll explain to people how they can get a hold of you and go from there.
Yes, I will.
All right, well, let's get right into it with the major indexes and get an idea of what they look like. We'll start out with the ES, which you have on the screen already. Yep. And obviously you can see it tried to dip down into the 4,900 neighborhood, and then it's come right back up to the highs here. A little bit of a new high, I guess.
Yes.
But that RSI underneath is a little bit concerning, but I don't know. What do you think?
I'm showing the weekly chart. So basically, to me, the daily and the weekly chart, at least on the Elliott basis, but also on a cycle basis, continue to present a more bullish picture rather than a bearish.
Okay.
So I feel that what I've done is, those of you that follow me, I have put up my alternate count, which is on the verge of being shifted over to the preferred, which again just leaves more room, upside room, for the S&P to get beyond a target that I have here in green, which is 5309. Well, now the future's well above it, but the 5309 is more pertaining to the SPX, the cash market, which is actually also well above it right now. So it is putting more pressure on the previous count that I'm using, which showed that the market should be topping around 5,300 to 5,350.
Mm-hmm.
Now, that would cause something like, and if it was topping, it would be topping in a more important, longer lasting high. And normally what we would see after that is an immediate rejection of those upper levels. That not happening. The fact that we basically at a very high level showed signs of breaking out down in here, and that was due to a cycle. So I'm pulling in cycles again, which is something that I've always had myself, but now I'm making it more part of my analysis. So we have cycles, both a 3-month and a 1-month, that are showing a little bit more bullish. We have a shorter term cycle that was due to bottom at the end of April, beginning of May, and it came in early. So, you kind of got the right-hand trend. So that is building a very positive picture. Again, for me, it may last through June, but it could go to September, October.
You know what one guy was saying that might work with that June is that a lot of buybacks may happen between now and the middle of June, and then those buybacks will be done by the middle of June. So he was intimating that the middle of June would be where the vulnerability meter might go a lot higher than it is right now.
Yeah. I think it's like what we're finding is that there are people that actually, that is part of their analysis and their work, is that they're following buybacks and how that all works out and how it's worked out in the past, which is great. But it adds one more little tool to at least a very near term.
Yeah, it's coincident.
Bullish picture. Now, if I take it off, so if I'm thinking that we're in a primary wave 5 to then complete that cycle wave 3, which I originally thought was done here, by the way, showing that this whole thing was a cycle 4th wave, and we'd be looking for something to come down. If it's going to be that the primary 5 goes up and the cycle 3 ends up somewhere up in here,
Right.
well, then we're going to get the same drop, but it's not going to be as severe, because then we're going to be looking for the market to drop down into the area of the 4th wave of 1 lesser degree. And if we're looking here for the cycle, excuse me, short term, I'm looking for this to go up, and then what the wave pattern tells you, or just Elliott tells you, you're not looking for much of a pullback. So as this thing goes up, let me pull this out one more and show you. We're going to go out one more, and I'm going to bring it down so I can pull it open, just to show the potential that the market really has. We've got a cluster that's wrapped around 5,400 to 5,450, but then you can see it gaps. Now, this goes along with what I would consider an intermediate 3rd wave, and this is like explosive, because I'm thinking we're into the final move of that. But if we get an explosive turn, I don't think it's going to get there, but I think we have a turn of getting up to 55.
Yeah, I mean, an earnings report coming out with NVIDIA,
right,
that's really
right.
off the charts. You know, if you were short the market, you're going to get blown out. And then if you wanted to get into the market on a panic FOMO, you know, the sellers are going to raise the offer price if all they see is short covering and FOMO people on the other side of the trade.
I agree. The professionals would kind of hold back. I do believe a lot of it, if not 75%, is going to rest on the shoulders of NVIDIA.
Yeah.
And what they do. Now, on a cycle basis, on the fact that I am looking for, again, like I initially showed, this intermediate 3rd wave to complete. And while these levels up here are kind of moonshot type levels, I do think that we could spike. And again, we got 2 things. We got volatility expiration Wednesday morning. Then we have the Fed minutes at 2 p.m. And then we have NVIDIA. This is all Wednesday. Then we have NVIDIA after the close. So though there's 3 volatile events that, and what I mean volatile, that have an effect on volatility, which right now we continue to see just get slammed. They continue to sell it.
And Thursday is a big day either for reversal, or if they can't reverse it, to make it go crazy on the one side.
But they may start, well, yeah, I agree with that, but they may start that reversal during that extra half hour or extra hour that somehow the market gives for money managers to come in and do this thing. Like the regular close is at 4 o'clock, but the market does trade for another hour.
Right.
You know,
oh, I see what you mean. It could be in the aftermarket that it starts.
Yeah. And then carry over to the next day where you're selling a sell-off. Because I do think it's like whatever's going to happen. I mean, I also look at, just to be honest with you, it's like to just throw another little piece into this whole puzzle. I go over and I'll look at the options, and I look at what you do. I'll go to NVIDIA and I'll check out what the at money straddle is trading for. And that kind of gives you an idea. It's like what the market is looking for. Last I checked, the at the money straddle was between, you know, $90 and $110.
Yeah, they're looking for 8 to 10% volatility off the number.
Can you imagine?
Yeah. And so the other thing that's interesting today is the VIX has been rising in spite of the fact that the markets are rising. So the VIX has gone from an 11 handle to 1231 right now. And and on a 1-day basis, it's turned up. And on a 5-day basis, it is in the process of turning up. So it's interesting to see the VIX is turning to the upside a bit in advance of this. We'll see if that means anything. Now, if they miss or something like that. But, you know, worst case scenario is they could have a situation where their margins are cut a little bit, but they may announce a split or something. You know what I mean?
Yeah, I do.
So there's other things that could happen, like or a big buyback, like what do you call it? Just did Apple? You know, they announced $100
70 or 80 billion.
buyback. Yeah, so they
say
even
more. Okay.
Yeah, it was 100 billion, I think. Yeah.
Yeah. So I do think it's like, but what I also want to put in there is the one thing you and I are really talking about, and that could really flip and fly within a market, is that volatility.
Yeah.
And because it's what it triggers, folks. It's not, yes, it's just an index and it's just a number, but it's money flowing in different directions. And then that money is taken and goes in other areas.
Yeah.
So they are all grouped together because it's a shift of money, but the volatility itself is what's really creating a lot of these additional trades, and a lot of it has stuff to do with, say, for example, NVIDIA. You know,
Mhm.
it's my interpretation of what is a good and what's blowing the doors off to an algorithm's interpretation of what's blowing the doors off. So we may get a spike in one direction or the other to totally be reversed. Now, if we're looking for a reversal, it wouldn't surprise me that the first line somebody goes, oh, they blew the doors off those earnings, and when they run the market up. I.e., if we take a look at what happened to Meta, when Meta reported, the initial move was like, we love it. Boom, they took it up. Second one was like, you're going to spend how much on product or
Yeah.
on development? Oh, sold. And not only did they sell it, they knocked it down $100.
Yeah.
So if we're still looking for that $100 move, it could happen in a matter of minutes.
Now, a couple of things. If you're looking at a shorter term price on the E-mini,
Yeah.
would you say well, I was looking at, yeah, the E-mini for June. Would you say a break on, because look at that RSI underneath there. If that
That's
are
on
like
the,
if
that's on
they
the weekly. Let me go down to the daily. Let's take a peek.
let's see if the RSI still looks like that. Not as much.
Well, but it is. It's now working its way towards being overbought again.
Yeah. So if we were to get under 53.20, and if this RSI rolled over, and the VIX goes from where it was going into today 11, and now it's in the 12s, if it jumps into the 13s and 14s, could we go down to 52.60, something like that?
Yes, we could. We could go even further. Again, this is the hour, the daily, but now I just want to take it down to the 4 hour, and then I can open it up. And we can, because what's important is, you're right, it's what's happening inside here.
Mhm.
I know I got a lot of lines and a lot of stuff going on, but consider that I'm right here. I'm looking for completion of a third. I know I already got it. That's the third, which I think I'll have to move over to here because we're making slight new highs, almost.
Mhm.
If not, then I'm looking for this thing to come back down. Now, 5260 remains extremely important for the obvious reason that you have pointed out. This is an area that I think the market would need to find support if we still have one more leg up.
Mhm.
Otherwise, then I'm going to consider this as a small four, and this might be the 5 here. And if that's the 5, then we're finishing that minute 5, which, by the way, finishes the minor 5, which, by the way, finishes the intermediate third. And then we get that bigger pullback. Let me just flip real quick to go out to the daily, because this is important to show that I'm looking for. If I'm finishing that third, I'm either going to find my support down here,
Mhm.
or for sure I should find my support down here. And you said break 50. What did you say? 5,200 or something? 56?
No, well, I thought 52.60 could be a target, but if it
It
breaks
is.
in the short run, 53, I got 53 ballpark area, 53.25.
Got it, because I have 5309. That matches your 53. And
Yeah.
then we're coming down below 5260, I think, for sure, because the target for a pullback, if it tops here in the intermediate degree, the pullback should can bring us back to 5,000 for starters.
Into
Now, but again, you're
that
talking
neighborhood.
intermediate degree. One
Yeah.
more time, let me just bump my chart up so you can see. This is what I'm talking. Here's the intermediate 3, and that goes from the December 2022 low up to whatever high we make here. That's intermediate 3. Intermediate 4 is not going to unfold or run over in a day or a week or this is going to take time. So we're looking at so many different things, trying to fit them together to put this puzzle together to say, well, is it that longer term high, or is it the shorter term? And we're gonna come down and hold 5260 and run again. Because we have both sides full of resistance to the upside and support to the downside on a short-term basis.
And people sometimes believe going into these holidays, people are in a good mood. And so generally the markets have a good vibe to them. So it may pay to have some patience for that middle of June timeframe that you were referring to, and the guy
Yes.
talking about buybacks. Because by the
Yeah,
middle of June, we'll have all the news from these earnings. We'll have all the
exactly.
news from Nvidia. We'll have all the news on what the Fed might be doing,
Or
and we'll have
not doing.
we'll have probably another CPI or so in there. And so if
I think, and to be honest with you, Jim, I will add, I think that's going to continue to be the albatross around the market's neck.
No, and
And
then
that's
look at the other thing, though. We're going to be going into that 90-day time frame of July, August, and September, which,
yeah,
by definition, is always a lousy time.
that, and then we have the cycle lows that are coming up, kind of mid to end of June. The next window is September.
Mhm.
So you're right. If we're just going to on the ebb and flow and cycle trough, cycle high, cycle trough, you're talking June, September
Yeah.
with the cycle high in between.
And in that time frame, you could have a more reasonable drop if the winds of change started to blow, which would be your retail sales that have been slowing down, really slow down. Your
Yeah,
labor market that's upticking on unemployment, really upticks in unemployment. And the gold starts looking at 2,500, and
yeah,
the interest rates don't go under 4%, but they go the other way.
right.
So there's a lot of things that could facilitate.
And also just to keep it in the time frame mind, that it's it's an intermediate degree third looking for an intermediate degree fourth, which suggests there is still an intermediate wave 5
Mhm.
up. So wherever this thing ends up, even if it comes all the way back down to here,
Mhm.
let's just say it goes to 5,000, I would still be looking for another move to break above the high wherever it comes in
Yeah.
and put another new high in and get up into these upper levels of resistance, which we will be able to fill in. Once the market starts to put levels in, it's easy to fill the gaps in
Mhm.
terms of where resistance is. But right now, I just want to make clear, it's like, yeah, we're kind of staring in the face to have like a month or so of we pull back and we correct. If you're a trader, you're definitely going to want to trade it, but it depends on what type of trader. Are you a long-term hold or whatever? It's like you may not want to be messing with anything right
No.
now if we're still expecting another top. But at the same time, you might want to take off some,
Yeah.
keep others. There's all kinds of things, but it just depends on what type of trader you are.
Yeah. The bigger worry seems to be if we actually broke 5,200.
Yeah,
And if we
and
broke
I understand
5,200,
why,
then
because
you'd have some pretty good rollover in some of these moving averages too. Because right now the moving averages don't look so bad. In fact, they look reasonably
right.
good. And so you don't want to
Well,
fight the tape.
I would think because the thought process behind a break at 5,200,
Mhm.
which it sat and sat and sat with that call wall for a long time. That call wall got broken because they just shifted it up to 53. And I think right now they're shifting it up to 54.
Yeah.
And they can do it real quick. These are the big boys. Now, don't forget also, I believe, Jim, correct me if I'm wrong, but JP Morgan rolls once a quarter. So they already did end of March. So the next time they roll their big hedge for their hedge fund is June, the end of June, the
Well,
last
okay, another
trade.
thing might be a factor is the balancing out of these 60-40, 50-50, 80-20 portfolios. Because at the end of June, you'd probably see your stock side way higher than your bond side. And so
There you go.
that would be sell stock and buy bonds just to balance those people out. So, right now there's no sellers to be found, but and you got a lot of buyers with the buybacks. But
Yeah,
after
yeah.
June, that music could change because the buybacks would be behind you. All these earnings are behind you, and I don't know how
Now
robust
we're
this
shifting.
quarter is going.
Yeah, and then we're going to start to shift. Yeah, I think it's like it a lot of times. This is the other thing that I advocate and I encourage. I think it's just very difficult to just say I'm going to take a bullish or a bearish posture because there's just so much more behind it. It's like when they're rearranging a portfolio, or if they're just switching things around, it isn't necessarily that they're changing bullish or bearish. They're following the money flows.
Yeah,
And that's the thing. It's like, I'm going to go where the money's flowing. And it's like, because if it's flowing in, the market's going to move up. If it's flowing out, they're taking the market down. I don't need to hang out.
Yeah.
So it isn't a matter of being bullish or bearish. It's a matter of just following the money flows. And a lot of it right now is so evident within options. And I talk about this because I know that your expertise, and it's one that is so attached to my background
Hmm.
that I don't think we can ignore it. I know you don't because that's your lifeblood.
Right.
But I'm deciding no, because where the option flows are happening, it really is dictating what's happening in these indexes and these ETFs. And there's a lot of money flipping back and forth between the spiders and the Qs and all of the variables that go there with it. So let's be
And when these pullbacks happen, sometimes they're fairly sizable. People might not realize it, but it had about a 400-point drop in April.
Yeah, exactly.
Yeah, it wasn't like
But I also think it's like,
it wasn't like a nothing drop.
no, but I think it's if you just take a look at the notional value of, say, for example, last Friday's expiration, I think it was probably 18 to 20 billion dollars. But the June expiration, folks, the June, which is June the 21st, that expiration is it's over 100 bill, I think,
Yeah.
combined. And there's been massive call buying, and it all goes off on June 21st.
Yeah. And of course, when there's massive call buying, somebody's got to be writing them. And if the public's
Yes,
not writing
sir.
them, then it's probably got to be Citadel and these other people who make markets, right?
Well, yeah, but yeah, exactly. But just that's what I also, because you hit the nail on the head. When we see the volatility trade coming into play, and we see that all the money managers and everybody else, they're selling the VIX and they're taking that money and they're buying all of the underlying volatility. That is Nvidia, Apple, et cetera, et cetera. Then it becomes that the dealers in those stocks,
Mhm.
the market makers, they sell those calls. What do the market makers have to do? Go buy the stock.
Yeah.
It's a self-fulfilling prophecy.
Yeah.
But eventually those dealers are going to be like, okay, we are done. We are now going to take our profit in the stock. And we're going to drive the price of the call back down, and we'll take that short off soon too. It's amazing that people don't catch on to that, but it's like they do it over and over and over and over and over again.
Let's see what the semiconductors look like, SMH.
Actually, they look pretty dang good, Jim. I gotta say. And how often you've had me on where it's like, you're kind of thinking we go up, and I'm like, yeah, this is another one that because of NVIDIA. So everything we talk about right now, folks, is because NVIDIA is a part of this index, or this ETF, excuse me. NVIDIA is in the Russell 3000, the Russell 1000, but not the 2000. NVIDIA is a member of the NASDAQ, so therefore it's in the Qs, and it's also in the S&P, so therefore it's in the spiders. So in the SMH, NVIDIA is here, along with quite a few other ones. But yes, it's actually got a little bit of a bullish picture. And if we're saying 1, 2, and this is just a 3, again, a little 3 comes down in a 4 and races to a 5, or that's the 4. Let me open this up so you can see what I'm talking about. Right, so here you got 1, 2, 3, 4. Yeah.
This is another one that has like a lagging RSI though, a little bit, doesn't it?
A little bit.
Yeah.
The higher high, and this thing is not poking its nose. And that which kind of tells you this could be thin. The participation obviously is one-sided at the moment.
Yeah.
And all we need to do is look right down there. It's up 25. What's it taking with it? Well, we got Apple. Because, hey, Apple's now onto the new chip that's AI or whatever. So, and now we got iPhone 16 that somebody put out a story about that. So you have to think it's like, okay, marketing guys, I see your timing's impeccable.
Yeah.
That iPhone 16 is going to blow the doors off and is going to provide a huge new revenue source to Apple. Well, so they're going to buy it in advance. So what? Buy the rumor, sell the news? I don't know. But here we are. So yeah,
they got some interesting stocks coming up here for earnings. On tomorrow, Tuesday, Macy's is coming out, and there's a lot of talk about that stock. I'm wondering, it kind of looks like it could give up the boat if it comes out with a bad number. Huh?
Yeah.
Looks a little heavy up there, doesn't it?
Yeah, yeah. Well, don't forget, they're not going to get any sympathy here in San Francisco because the city's desperate to try to keep them in place in Union Square.
I get
And
you.
they've already reported that they're going to close that store. That
Ah,
they're basically leaving San Francisco and
right,
they're closing stores coast to coast, not just here.
right.
So if they're successful in doing all of that and really building their online sales, which that's where people still want to buy Macy's, they're just going to do it online, so they don't need to pay for all this brick and mortar everywhere.
That could help their profitability.
It could, it absolutely could, but again, don't expect it to be reflected immediately.
Right.
But it's
Well,
sure.
certainly down at $10, it looked like a pretty good deal, huh?
Well, yeah, come on. You're
Yeah.
like, okay, you afford the $10. All right, I'll buy a share.
Right.
You
Right.
know, if you buy 10 shares, you're putting in $100. All right, sit with it.
What
They go
about
down.
Toll Brothers? How's those homes going? TOL. They're coming
Um,
up tomorrow too.
While they're liking it, I
Yeah.
don't see necessarily why. This is the daily. Let's go take a look at the weekly. Oh, this is all bullish all the way around. I'd be looking for this to top. You got to start to think, look at that. I'm out on my monthly. And
Wow.
it's new highs, new highs, new highs.
Yeah.
And again, though, I have to be honest too, if this Elliott is correct, if this is like a big three and this is coming down in a four, and this is one, and this is a two, and that's 1, 2, 3, 4, 5, a 3, 4, 5, you're going.
So it's got another blow off phase, you think?
I think it could still be in it, and then we get another little slam dunk maybe after earnings, and then they do it again based on the earnings, spurnings, you know. But if I even took it from here, it just looks like 1, 2, 1, 2, 3, 4, 5, 3, a 4, and still a 5. And that's to finish just the 3
Yeah.
coming over here. Now, being that this is like uncharted water, uncharted territory, I mean, I'd leave this one to the professionals or trade
Yeah.
options,
Yeah.
because and please check in with Jim because he'll show you how to do
Yeah,
it.
but your charts indicate exactly what I try to tell people is that if a market's bullish, you just have to buy when it's back towards the lines. You can't buy when
Yeah,
it's
yeah,
just
yeah.
extended because this is
No,
where
yeah.
this is where you're going to get hurt if it goes back to the line. At least if you buy it on the pullback to 66 or something like that or 70, at least it had a pullback and then it can go on another run. But here, if you buy it up near 140 and the thing has a pullback, going back to 100 is going to hurt.
It's going to kill you. Even going back to 100 from here, yeah, it's going to hurt.
Yeah.
Because I thought it's like, yeah, if they can pull back and hold par, which is 100,
Yeah.
then yes, then we got that opportunity where, because I think if it crosses this down here, right, this level, I think maybe that's showing me this is done.
Now, how about a couple of retailers with the cheap moniker, TJ Maxx and Ross Stores, TJX and ROST. One comes out Wednesday, the other one Thursday.
This is the same thing. Look at that. Oh my God. How much left? How much additional do we have? It's just way. But check it out. New all-time highs as far as I can tell. And lower highs.
Yeah.
Lower highs than the RSI.
I went in there and there's 9 million things, knickknacks and everything else in there. And the women were the primary consumer in there and very popular with people looking for this, that, and the other.
It's affordable. So
And it's
yeah.
all affordable stuff. Yeah. How
So
about Ross? How about a Ross? Ross is just pretty much clothing. Well, they got everything too. Not as much as TGA Maxx, but
Ross Dress for Less.
yeah, same stores.
Every last one of these. Boy, what is the retail ETF show? Got to show the same thing.
XLY would be it, or XRT. Yeah, pretty steady.
Consumer discrete. Well, this one I like. Pull back now. Yeah, because you got your pullback.
Yeah.
So you might get another one, but at least you've got your markers.
Yeah. Yeah. What about XRT? That gives you like a little bit of about 9 million companies.
Uh,
That's volatile.
a little bit more, but it also carries the same threat. I like the floor that they're kind of building right here,
Yeah.
around 55. And if that, I mean, they may come down and visit it again, which is not the end of the world, since it's coming off of like maybe 70. If you go in and try to play huge, yeah, it's going to hurt. But if you just play smart, because the other side of the coin is that this could have been little all the correction, and now we're starting to build to go up. I don't think so, because it's kind of three-wave looking, kind of suggesting maybe we come down to 47, 48 first.
All right, how about this one? This is coming out on Wednesday. Snowflake, SNOW. It had a huge drop. It looks to me like it's turned up. And there's a big gap between 195 and 225. And to me, it looks like it bottomed out at 145. What do you think?
Oh, look at that. Wow. Not pretty.
No. What I have it on a 1 year. How far back are you going?
This actually is July of 21, yeah, June of 21. If I go to my daily 1 year.
See,
Oh
doesn't
yeah,
it look a little bit more.
that was their first quarter
Yeah.
earnings.
Yeah.
Ooh, they didn't like them.
But it does look like it's trying to make a turn there with the average.
It is, but it could just, every
It can fall apart.
every horse has its day.
Yeah. But that low with such a higher RSI low was really telling you was tapped out down there.
Yeah. Yeah. Yeah.
And
I don't know.
those gaps are attractors.
This you mean?
Yeah. That's a huge gap.
Well, the other one is here, but it's not as big.
And we had a big gap over there in November, and obviously ultimately it came back and filled them all.
Yeah, there you go.
So it just tells you, gaps do get filled ultimately.
Yes, but if they were to take it back up to 200, I would be, well, again, they've had to have some type of a turnaround. I remember when I have to try to remember what the narrative was as they ran it up to start the year, at the end of the year, that they were onto something. With Snowflake, did they do something AI?
I know that there's some pretty big shooters as their investors,
Okay.
and
What's
I
their
think they just
product?
really came down on valuation, to be honest.
Okay. Do you know what their product is or what they do?
Yeah, the main thing for these guys is cloud-based computing,
Okay.
and so that's kind of a big thing. And
It still is. It still
also
is.
data, they do data storage, analytics. So they're in the same thing of taking all the data that we inadvertently gave to these people and monetizing it. I watched it on the plane. I watched the big long movie about Zuckerberg. That's the name, Zuckerberg. Yeah.
Mark Zuckerberg?
Yeah, and so they showed his whole inception, and it really is all about how he, got people to give all their personal information when he started the thing back in college, and he couldn't believe how people were so forthcoming, giving away all this information.
Right.
And then,
He sold
of
it.
course, now it's the information on steroids. And then he monetizes it by selling ads and telling people, hey, listen, you want to sell a car? I can give you all this information based on my data. There are probabilities of buying a car. Would you like to advertise? And
Right.
that's the game. That's the game in a nutshell, right?
Yeah. I mean, people, if you ever go on Facebook and you suddenly start to see ads, you're like, how did they know I have a pain in my neck?
Yeah. And the other thing is that there's no coaster brakes, or there wasn't on, and they knew it, on people getting on there with bad intentions, like dictators or people trying to join some pretty radical groups, or just a lot of shall we say bad actors. And
Yeah.
when you have a distribution thing of 2.5 billion, 3.5 billion, there has to be some responsibility on what you're distributing. You can't just say, I'm the phone company and it was a obscene phone caller and we can't control them. You know what I mean? I think I think that was kind of what they were thinking they could get away
I'm
with.
sure. Who knows what the end of all that story is going to be? I think artificial intelligence is our next threat, and I really do say that sincerely. It is a threat.
Well, it can
Um,
be, like I say, you can replicate people's look and voice and have them say anything. That's what Buffett was saying at his meeting, is that scammers are going to have a field day with this AI because, they can get a AI thing of him and his voice saying things he never said.
right. And I have to tell you, and then of course we have the whole crowd that'll go, "Oh, boomer, sit down and be quiet," because I
Yeah.
mean they're starting to say that to me. And yes, I'm tail end boomer, but
Well,
it's like,
everybody
oh,
likes the Wild West until the Wild West bites them in the butt. You know what
I'm telling you that there you go.
I
I think we should coin that one.
mean? Yeah.
I do, before somebody else does. Can we go over and talk about gold?
Yeah, let's do it.
Um, Gold is stunning us. And again, I have to tell you, because if somebody was like, well, why is gold suddenly being attractive again if we're not getting lower rates and the dollar is kind of like not really going down, not really going up. And I'm like, because there's all these articles that are now talking again about the digitalization of the currencies and how China is selling our bonds. So they're getting out of their decades long support of US debt.
And 18 months straight of China buying the gold.
Straight. Thank you.
Straight.
Straight.
Unrelenting buyers.
And if we took a look at why, because it's like whoever's like studied abroad, they realize it's like, well, guys, if we're going to really kind of base things on our economy and we're not going to have a physical currency backed by anything but the good faith and credit of our government, maybe not going to get a lot of takers for our digital currency, and shifting it to be the world's currency of trade or for trade. And anybody who's been in the market long enough and traded Forex and traded all these different instruments long enough realize that the Chinese leadership for decades, their goal has to knock the United States out of its pole position of having the currency for trade internationally. And so that left everybody else outside of the United States is dependent on holding dollars. So they become subject to all of our little, flu sessions of having the flu and tossing our cookies, whatever. And I guess they want to take over that position. And of course, the United States, I don't know what they think they're going to do, but I don't think we can go battle something like that.
No. Now the gold, I'm better at the floor than I am the ceiling. And it seems to me like as long as we hold 2420, 2400, and then your 2290 area, then I think everything is fairly okay. But if we were to start taking out, the 2420, 2400, and then
We'd have to go all the way down to
2300. Yeah,
22.
if you blow that out, then you could make a decent case that the run is over.
Don't know if
Or
I'd say
at least for a move down towards 2100.
I like that better than to say
Yeah.
that it's over. And
Well, I mean, over meaning
but
you're
I
going to
think,
forget about the 2500s for a while.
well, look at how close we are.
Oh no, I didn't say you do it today. I said I'm good with the floors, not the ceiling.
Actually, I think we
Yeah.
could.
Yeah. Right now
Not
there is
right
no
now
ceiling.
because
There is
it's
no
too
ceiling,
late.
right? There is no ceiling. Yeah.
Well, yeah, I do actually. I do think eventually, everything has its ceiling, but those are my upper levels that
Yeah,
I've
yeah.
had in place for a while. And again, coming off of here, strange pattern, but it was a 4. This is a 5. In gold or in metals primarily, it's the fifth wave. It's the fifth wave that'll just blow up. will be huge, and you see all your activity. The high that we saw previously, the high from 1980, that was a fifth wave. The high
So
we
this
saw
thing looks like a
coming,
2644 number if we got a good pop, huh?
yeah, actually, yes.
But that's a 618.
Yeah, 1.618, and that's of this move.
Yeah.
And when I see them do what they did, and I'm like, why are you taking gold up 30? Well, now it's up at 21. Why was it up like $30 early? It's like, why are you moving gold against all this other stuff? And then I see the article,
Yeah.
on what they want to do with the currency. And I'm like, oh, okay. So yes, bear in mind that central banks, not just China, but
Yeah.
China, Russia, Pakistan, India, I believe Turkey.
Yeah, they're trying to get an alternative clearing currency, but no one's going to take these silly currencies without some backing. So they're probably going to be looking at partial gold backing.
They have to. So you're
Yeah.
right. You're right. So it actually brings legitimacy to cryptocurrency.
Now, the game on silver is very interesting because the guy was showing that it's normally 60 times you get 1 ounce of gold and it's at 80. And that gap could very much collapse. And if it does, that means you got a $35 to $40 price on silver.
Yes. Let me reveal.
Let's
That's
just
my
do
next
some
stop.
math here. If we had it at $40 and it's at 80, 60. Yeah, there you go. If it goes to $40 and it's times 60, you're at 2,400 gold. And then someone was saying that's kind of like the normal, more
Yeah.
normal price.
And thank you for doing the math. But
Yeah.
here again, if I'm thinking we're in the third wave, not the most powerful, but this one. And now it's inside the 3 of 3. That'll be the most powerful out of this segment. And look at how it's just cleared the hurdles. Clearing 30, I think just the dealers knew we're going above and we're taking it high enough that anybody who sold or put the little stop up there, you've been triggered. And they did. That's what happened overnight. It just kind of went. Bob Louie. That was Friday. And they followed through today. So
And I'll
there's
tell you, if you put up SILJ, you'll see that the junior miners have really been picking up a bit.
but they need it. These
Yeah.
poor guys.
Yeah.
Yeah,
But that's a hell of a run, and that's a hell of a run in this year so far. I mean, the darn thing
I don't
in
think it's
March was
over.
at 7.5, and then we're at 13. You almost got 100% gain on it in the
Yeah.
last 60 days.
Go check and see what old-time silver traders think that the ratio should be.
Well, it used to be 30-60.
They got it a lot lower.
Yeah, it used to be by the, I forget it was. I think it was by the gold if it's at 30 to 1, and then do the silver. I'm not exactly sure, but I know the 30-60 rule was going on for decades.
Yeah. I just think that silver is doing extremely well. And yeah, there's I don't know if you know these guys.
Yeah, that's a big position for Michael Burry.
I know. And I've been sitting in this one way before he was.
Where's Saratoga, California?
It's from San Francisco. It is about an hour and a half north.
North. Okay. So it's like Santa Rosa or more towards the Russell
Yes,
River?
yes. Actually, you would go directly east from Santa Rosa and you'd run into Saratoga.
Gotcha.
So
Nothing
yeah,
wrong with that neighborhood.
so but these are Canadian guys.
Yeah.
And
Does
the
that give you a
silver,
different tax deal? I mean, you get one of those foreign tax income things, or I don't know.
yeah, but I'm
Just an
haven't
added
sold.
thing to look at.
I haven't sold any. So I'm
Yeah.
not really worried. What I like about them is that they actually have, for every dollar that somebody puts into this fund, this ETV, they actually, it
100%
is
metal.
backed by gold.
Yeah.
And they also have the silver one. Now I can't remember the symbol, but they have another one in silver, which is also doing spectacular.
The industrial metals XME and FCX Freeport McMoran, though that's not a bad place to
Oh,
be.
look at this one. Metals and mining, ETF. Yeah, I mean, are they a laggard? Because that's the last thing that, you kind of want. This is like you keep saying, Jim, and I think it's so important. You don't want to be late to the party
No.
because if you're at the tail end, they're going to let you in. Of course they are.
Yeah.
And you think, oh, I made look at that. Now it looks great. It's like, yeah, until they decide, okay, that's high enough, smack.
Yeah.
And it just kind of.
You'd like to have your get out point somewhere near your entry point, and if you're buying it very extended from the averages, your get
Well, I
out point is
think
going to be pretty arbitrary.
on this guy, on the XME, they probably are going to try to get it above that 66 level.
Mm-hmm.
Let me see what they got. Yeah, that's it. And then that's corrective. That was. Yeah, this looks a gigantic ABC up. So maybe it gets two there, maybe it goes a little bit above. And then it's sayonara.
The 13F filings came out, and I saw a lot of these guys seem to be increasing their exposure in the first quarter to China. So let's look at FXI and a few different China stocks to see if there's anything there.
All right, this is the monthly. So here we get the biggest picture we got. You and I've looked at this before because these are still sitting here. Now, this is coming back up. So obviously you must have seen that and thought, okay, that's a low. And it is responding. It is moving.
Yeah. How about something like a 5-year graph?
Let's go to a weekly 5-year. Actually, pretty good. Pretty
And
dang.
you're getting the averages rolling up a little bit here.
The averages are rolling up. More important, these guys I expect that's a 13, that's a 20. This orangey goldy one is the 50.
And they're
And
crossing.
these are EMAs. These are actually, they're called legacy because TD Ameritrade had to be different, or Thinkorswim had to be different. So there's a little tweaking to them. And so sometimes I'll switch and I'll move it to the simple. But here I would think that this for sure should get above here. If anything, that's a low. First leg up should get here. Second leg up should get up into here. These still remain valid. And all we're doing is correcting that nasty drop.
Now there's 3 big companies they seem to be buying. One is BABA, BABA, and that's already turned.
Yeah, Baba. Just because it's everybody. Oh, but it has tons of room. But it has to now follow through on everything.
Yeah. And then JD is another one.
Just plain old JD.
Uh-huh.
A little bit better than Baba. What do they do? Is that another commerce?
I believe so. The other one is Baidu.
Oh, yeah. That one's very popular. See, more popular it is, it gets caught.
Yeah.
But it actually, I think it should continue. Again, this is the weekly, so this is a 5-year chart, let's say. And you don't want it to see, you definitely don't want to go below 94 or 93.73. If you're thinking about getting along, but you want to pay attention to your moving averages.
Yeah, no doubt about it. And JD is into the e-commerce, and this one's also internet-related services, and they're into search.
Yeah. See, again, I think it's very important to pay attention to the developments in artificial intelligence and where it's going to show up. Because I think without oversight, that's all I think I could ask for is oversight. It's going to drop into some really bad places and it's going to get tarnished instead of all of the wonderful things that it likely could do. So,
the big also one last one is K-Web, because again, China is trying to do things to stimulate things. Of course, they're not doing enough, but K-Web
which is Trade Shares China Internet.
Yeah, it's their internet companies, and e-commerce and all kinds of diversified in the tech sector.
Well,
And
this is just a very quick, easy fib, right? If you're looking for what this leg could do, you're going to compare it to this leg. And you got, there's the minimum would be 34.40. And
yeah,
it takes you right up to this. And this is again the 5-year, takes you up to the 200 moving average, which is sits just above it.
yeah,
But most of the time we're looking for equality. So it's 41.65.
yeah. So
You know?
this one actually has a little better legs on some respects.
Yeah, yeah. I would agree with that.
Yeah.
Sure. For sure.
We let me just see here. What about the US dollar?
Oh God.
DXY.
Yeah. This is the horse that just won't give up. I haven't changed my labeling in a while, but I will say this is the 5-year and we can bring it down. But I want to just get inside here. So even if I just go this way to show that this corrective move, but this can no longer, I have to take this off because this is now ending with a 3. So could it be that this B wave, this is A, this is B, this is C, this is D, this is E. So we may sit, and this is a weekly chart, we may sit sideways for much longer than everybody has patience for. Now, if you're good and you trade the currency or you trade something that can move like this, then you can trade this move, that move, this move, and that move. If you're a professional trader, then you just adjust to what's going on. So in other words, you may have a net short or a net long position, and there are times when you're going to want to add to your net long or your net short, or you want to decrease one or the other, and you just roll with your position. So if you know how to trade, and again, Jim, you know what I'm talking about, you choose wings, you choose, different things that you're going to pick up that add delta or take delta from a position. And I think that here, the dollar's just not ready to do anything because they're not getting enough information from, oh, do we buy it because we're going to get a higher interest rate, or do we sell it because we're not going to get a higher interest rate? We can take that money and put it somewhere else. Like actually, or do we buy the dollar because I need to pick up some 30-year here or 10-year or anything else because I want to put that aside because that's going to give me 5% plus. So we got going on. It's just a lot of they're moving it, but not really with any conviction to anything.
I'll look at a couple of cheapies real quick. In China, DIDI is a ride hailing like Uber over there. And if they are going to pick up their economy, you would think maybe more people would have to have a ride. I bought this thing while they were in lockdown at like $1, and it ran up to like $5 after they came out of lockdown. So I'm just wondering out loud if this thing is going to get another run if they actually get their economy running a little bit.
Is the symbol DIDI? Because
I thought it's not coming up.
it's not.
Yeah. Well, anyway, if people want to check it out, it's interesting in that it is cheap, and it is a ride sharing type of ride, get a ride type of company.
Yeah.
What about Pfizer, PFE? I mean, the darn thing has gone from $60 down to like 25. I mean, has it turned?
It's trying. I'll tell you. Oh, that was look at that.
Yeah.
I think if depending on how you trade, folks, but I'm looking at that candle. That's a weekly. That's a weekly candle. That's an extremely bullish engulfing, and it nearly engulfed the entire little decline that it did from March down to that April low. See, that's the other thing. This is why when you start getting these signs, again, going back to how we started in the S&P,
Yeah.
that the April expiration actually, folks, was much more important to the current moves in many of these stocks. Because you'll notice here's Pfizer. When did it bottom? April expiration. So we're seeing this as all that negative, whatever was on there, calls, puts, whatever was there, expired and are gone. And it was a whoosh, a relief of like, okay, we can now come back up from the ashes or whatever. And they're doing that. But to sustain it, we have to see this movement come back in. And maybe that's what, because it should continue. But then you got to look, it's like, well, what's Pfizer's weighting in what index? Because if that goes up, maybe it goes back to 35, maybe it goes back to 45. It could, because it's all a part of that nasty decline that went through.
And two sobering, cautious flags, for the bull market is the Russell is not made a new high and not really near one, and the transports are not making a new high and not nearly near one. So those two things, the small caps and the transports, have not really confirmed, that this is here to stay forever. You know what I mean?
Yeah. This is the NASDAQ transport. What's New York's?
DJTA?
Oops. Well, you're right. It is. DJTA. Yeah, how about DSTAT? That's Automobile and Titans. How about if I just go DJTA? Automobile and Parts. No.
Well, there it is. It says DJ and then Fred.
Yeah.
Yep, that's it.
Yeah.
So go back on a 20-year graph and you'll see that it hasn't made the new high. The high was at like 18,000. Not showing it here for some reason, but I got it at about 18,000.
Okay.
But it's certainly a couple thousand underneath the high.
Right. Several thousand.
Yeah. And
yeah.
so, and the IWM's high was like 240.
Yes. IWM actually, you should mention it. There I have it. Bingo. Let me take it out of this forever chart, put it back here. IWM, it's kind of an interesting chart because again, I could move that. And if I'm going to call that an A, I got to call this a B up here. And so I've got where it can get up between 220 and 227.
Yeah. And some big shooters have put positions in Q1 on this. So it wouldn't shock me if they could move it higher.
They keep trying.
Yeah.
They do keep trying. I've got people that are 350 or excuse me, 250, which puts it at a new all-time high. This is the all-time high for the index here.
Yeah.
So I'm like, well, if that's an A and this comes in as a B, it can get almost all the way up there. And then all you're expecting is another run back down to here.
Yeah. Hey, listen, it's an election year, and everyone in there is a politician in some way, shape, or form. So if they all want to keep their jobs, they can do things like in October, hey, we're going to be cutting interest rates next year, and be 6 months into the year and not do anything. But everybody has already bet that way.
Right.
And so, they can do whatever they want to get the thing to do whatever it wants,
True.
So
all right,
if they want the thing to shine by the end of the year, they can do it. All right, well, let's do this now. Let's introduce yourself again on how people can get a hold of you and then explain what you're going to do for them when they get a hold of you.
Okay. Again, I'm Michael Filighera, logicalsignals.com, tradershelpingtraders.com. You can choose either one, or if you want to get a hold of me, excuse me, please feel free. Michael at MJF1, the number one, partners.com. I always answer my email, so you can ask a question. You can ask about me personally. I offer coaching. And I also have a trade room, and I'm putting together new products. And what I want to do in those products is tailor analysis to what specific people need specifically. And then also try to put together maybe a Discord room where people can have a forum to come and get answers or just be able to talk should they want to. And it'd be more of choosing like from an a la carte menu. Instead of having one price fits all, it's like build it so that if all they want is one, then it's priced such. If somebody wants 5, well, it's priced such. So I'm just thinking it's a better way. And it takes me back kind of my roots because I don't necessarily recommend trades, but I do suggest. So
sounds good. Sounds good. So get a hold of Michael, let him give you the things that he can do for you. And as far as Option Professor is concerned, go to Option, OPTION. Professor, PROFESSOR.com, put in information, and I'll come back to you with a link to the indicators I use, the markets that I'm focused on and what I see happening in the next short term. And if you have trades you're in there right now and you'd like to do an analysis of them to see what you're holding, we obviously can take a look at that as well. So that's optionprofessor.com. All right, Michael, thanks for being here. We'll be back together, I'm sure. And right now I'm going to send it back over to David.
Thank you, Ken. Thank you, Jim, very much.
All right, thanks, guys. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can find the updates on Substack now as well. Just search for Timing Research. And I just want to thank my guests again for today. Michael Filighera of logicalsignals.com and tradershelpingtraders.com. Also, the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you.